Hey everybody, this is Halstead and Andrew McMillan with REH CPAs. Today we want to talk about the difference between itemized deductions and a standard deduction on an individual tax return. I've got Andrew McMillan here with me today. Andrew, what can you tell people the big differences between itemized deductions versus standard deduction?
Yeah, we run into this question a lot with clients, and you know, it's not a well understood area at times. So basically, though, if you're a taxpayer, the IRS gives you kind of what I refer to as a freebie. So they're going to give you a standard deduction no matter what on your tax return, and you don't even have to do anything about it. Just you're going to get that, and the standard deduction amount is dependent upon whether or not you're married, what your filing status is, whether or not you're married, single, head of household. You're going to get a standard deduction. So for example, if you're married and you and your spouse collectively earn about $150,000 a year, well, for a married individual, the standard deduction is about $28,000. So the IRS is going to subtract $28,000 from your income and only tax you on the difference. So in that scenario, you're only going to get taxed on $122,000 of your income, and you didn't have to do anything special to get that standard deduction.
It truly is what it's named, standard deduction.
It's just a standard deduction for your tax return.
Yeah.
So everyone gets that if you so choose to take that deduction. So conversely, some people would rather itemize their tax return. So you only get one or the other. You either can take a standard deduction or you can take an itemized tax deduction. So the only reason you'd ever want to take an itemized tax deduction is if your itemized deductions are higher than your standard deduction. So what we do when we're doing the tax return is we run it both ways. We run through all of your itemized tax deductions to make sure that we figure out which one's best for the client. So the next question is like, what is an itemized tax deduction? So those are going to be medical expenses. If you have a lot of medical expenses, that's going to be an itemized tax deduction. Now, medical expenses are limited to your income. Like you usually have to have a lot of medical expenses in order to actually deduct those on your tax return.
Yeah, because usually it has to be either 7.5% or 10% AGI, depending on which year it is.
Right.
But that kind of goes back and forth.
So you may have medical expenses, but it may kind of be lost on how much income you make. So medical expenses is one. The other one is state and local taxes. That's going to be your real estate taxes, property taxes on your vehicles, state taxes you pay to North Carolina or any other states that you may have to pay taxes to. State and local taxes is another big itemized tax deduction. Now there is a caveat to that. Those are limited to $10,000 now. So if you pay more than $10,000 in state and local tax, SALT tax it's kind of referred to, you're going to be capped at 10 grand. So another big itemized tax deduction is mortgage interest. You can deduct your mortgage interest as an itemized tax deduction. And charitable contributions. So charitable contributions, mortgage interest, state and local tax, medical expenses, those are the four biggest itemized tax deductions that you're going to see. If all of those collectively add up to more than your standard deduction, then you need to take an itemized tax deduction. So again, standard deduction, it's changed some over the last few years. It's really increased quite a bit.
Quite a bit.
5+ years ago, it was a lot lower, a lot smaller.
About half as much, yeah.
So a lot of people itemize their tax returns. We don't see as many people itemize this year, but it's one of those things. If you're looking at your tax return and you're like, man, I know I sent in my charitable contributions, I don't see them on my return. Well, it may be because you're taking a standard deduction.
This was especially helpful to our retired folks that like their mortgage is paid off and things like that, and they didn't have a lot of itemized deductions, so this was really helpful for a lot of those folks.
Yep, for sure. So just something to be mindful of how the two deductions work together, how they're different than one another, and what to help you understanding the differences between the two can help you plan for your tax year.
Awesome. Really good information, Andrew. If you have any questions over itemized deduction versus the standard deduction, feel free to give us a call and we'll help you out. Thanks.